I think right now there's not a ton of buyer competition. I think that rates are still high. There's still bad news in the marketplace. I think the market will continue to soften before it improves. But I believe that sometime in 26 and definitely by 27, things are going to heat up. The news is going to turn around. The rate environment will be lower. And I think there's going to be a lot of buyers that are on the sidelines now that enter the marketplace. The Federal Reserve has printed 80% of the money supply since 2020. And although a lot of those chips are off the table because of the high rate environment, I mean, you can get 4%, 4.5% risk free in a CD. So a lot of that money is parked right now. But I think as the rate environment comes down over the next couple of years, I think a lot of those chips will re-enter the playing field. And I believe, like you said, the way to build long-term wealth in real estate investing, I truly believe, is to hold these assets long-term. Let time do its thing. Let inflation do its thing. And I want to be a net buyer long-term, not a net seller. I want to build $1 billion real estate portfolio with Summers Capital and with everything that we're doing. And I know that you don't do that by selling a lot of these assets. You do that by buying more and more assets and buying good assets to where you can add a lot of value and refinance your money out and continue to roll them into more assets. So we'll see. But I think as long as you're playing a long-term game, you're buying assets in good locations, you're buying them below market value, you're not overpaying, you're going to do relatively well, even if you buy it this year.